With gains for the seventh consecutive session, Nifty inches closer to 11,000. The Sensex gains over 130. Midcaps outperform with the index gaining over 1%.
Rate sensitives are the flavor of the day after the Reserve Bank's announcement to step up bond purchases. 10-year yields soften, NBFCs and real estate stocks gain.
Lower crude oil prices in the Reserve Bank's open market operations. Buying gives a leg up to the rupee. It gathers more strength. On the other hand, IT stocks lose in trade.
Public sector banks also perk up in trade. Sources tell cnbc TV 18 government is now looking to issue additional recapitalization bonds worth 40,000 crore rupees in the current financial year.
Reliance Communication drops nearly 10% in trade after telecom department strikes down its spectrum deal with RelGeo. ICICI Lombard too loses on reports that it's exploring various options for acquisition after losing out the race for Star Health Insurance. Well, those were the top 5 headlines from Dalal Street on a day when the Nifty gave us the pleasure of desiring the 11,000 mark but stopped short of it. Welcome to Markets Today Talk Back, the show where we tell you everything that happened in those 6 hours of trading in 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. The gains continue, and what a market it has been actually over the last 6 or 7 trading sessions. Almost 600 points, 650 points nearly from the lows of about 10,300. As Lata said, we will talk about the top stories which dominated and drove markets. We will answer your questions. And to help us do that, we have Prakash Devan right here in our studios. And on the charts, we have Ashwini Gujral. Prakash, Ashwini, thanks very much, both of you, for being with us here on the show. Before we start the Q&A session, as always, we spend 2 minutes looking at what really happened in the markets today, both top-down and bottom-up. Lata.
Well, for starters, you said that, the last few days have been days of outperformance. That's because ever since we hit that bottom on the day after the governor resigned and the day when the BJP lost 3 states, all the 3 states where elections were held, the feeling in the market appears to be that there will be something big that will come out in terms of fiscal or monetary stimulus. I would argue that what came yesterday was a monetary stimulus. The Reserve Bank had already said that it is going to pump in 40,000 crores of cash buying bonds in each of the months of December, Jan, Feb and March. And yesterday they scaled it up to 50,000 crores per month. Now, that's gigantic in terms of an announcement. It's 25% more just overnight like that. Money coming and a promise of more money coming. And that led the yields to drop. I mean, when there's too much of cash available and they're all chasing the bonds, you must expect bond yields to fall and bond prices to rise. That's what happened 7th quarter. I mean, to give you an idea of what the 7th quarter is, about 12 weeks back, it was 8th quarter. So that's a measure of the fall in interest rates. And who are the guys who borrow from the wholesale market? NBFCs. They were the guys who rose a lot. PSU banks rise because they have bonds on their investment portfolio, and those obviously the mark-to-market gains make them richer. And all rate sensitives, real estate stocks, when interest rates fall, they're the ones who benefit. The other reason why bond yields fell and why the market party continued and was continuing is Brent, of course, a low of 56.5 for a better part of the trading day, kept oil sensitives, energy sensitives, oil marketing companies, airline stocks, paint stocks, all of them hydrated. So, the fundamental point I want to make, Prashant, is that cost of capital is what has come down over the last 12 weeks when the 10-year bond yield falls from 8th quarter to 7th quarter. When cost of capital falls, mid-caps do well. And that's what you saw today. I
mean, actually, I want to start with that point, Lata, that, the last many trading sessions, if you look at the mid-cap and small-cap action, it was a bit of a stop-start. And, it wasn't very clear whether the broader market is going to join the party. But now I think looking back, it looks like, well, it has. So even as the Nifty today came off the highs by 20-25 points, the small-cap index ended practically at the day's high. The mid-cap index was up about 1% plus. Advance decline was very firmly in favor of advances. So, it's not just the large stocks, but it's starting to spread to broader markets. And it is always important for, the broader market audience that the broader market, smaller stocks participate, and that creates that feel-good factor. It looks like it's starting to happen. There were pockets of strength, real estate, rate-sensitive, PSU banks, infrastructure. You've already sort of outlined what tends to do well. So those are the sectors. As far as Nifty gainers are concerned, there was Indiabulls Housing, top of the list. Lots of financial names there. Bajaj Finance, Finance, Finserv and Finance. There was Axis Bank, which was one of the big gainers. Asian Paints, oil sensitives like BPCL also. I mean, just sticking to large caps for now, which did very well. Public sector banks and long list there. I mean, the big one, State Bank of India, of course, was up 2%. But look at this. Vijaya Bank, Bank of India, Central Bank, Syndicate Bank, Dana Corporation, all of them doing well. And of course, wrapping up with NBFCs, all kinds and all hues. Muthoot Capital, Shriram Transport, L&T Finance, Chola, broker NBFCs like Edelweiss, Motilal also doing very, very well. Lata.
PSU banks had quite a few things going for them besides the
recap and the PCA possibility.
Yeah, possibility of at least 2 or 3 of them, like Bank of India and Oriental Bank coming out of the prompt corrective action framework. All this was going for them, everything going for them. Actually, that's my first question to our guests. Let me welcome Prakash and Ashwini again. Ashwini, you know, Nifty almost touched 11,000. Now, what's the next trade? Does it conquer or is the rally tired?
See, there's a difference this time in terms of, you know, the way markets have rallied. They've rallied to 11,200 thereabouts 3 times. Once it went up to 11,700 also. But none of the times the mid caps had done well. So it appears that even if there is a correction, you come down to about 10,750 thereabouts and then again take out 11,200. So for the short run, it may be tired, but the way mid caps are moving, it looks like fresh money is coming into the market, and possibly at some point we will again break the 11,200 sort of jinx. So people should continue to hold on to mid caps, and you know, large caps, they'll be churning up and down because you need a higher base to work with, because your current base is 10,300. So that has to move up to 10,750. So a few days of choppiness could happen.
Okay, so broader market, that point that Ashwini making. Well, the second story, the second headline today, rate sensitives were the flavor of the day after the Reserve Bank of India announced that they will step up bond purchases. This move by the RBI pulled the bond yields lower. Non-banking financials did very well in trade, led by Indiabulls Housing, Dewan Housing and Repco, all of which gained between 5 and 10%. Real estate stocks are also rate sensitive. They too saw a big surge. DLF, for example, is back above 190. Hoodco, Indiabulls Real Estate, all ending the day in the green.
Okay, and on that note, let's invite some questions from our viewers. Rohit Desai has written to us from Mumbai with a question on Repco Home Finance. He says he has 530 shares of that company, which he has bought at 675 rupees.
Stocks at 370.
Oh, a fall. And he's been holding it for 1.5 years. Obviously, he has bought it during the NBFC frenzy days. Should he hold or sell, Prakash? I know, difficult question.
Yeah, no, so this is typically what happens when you are buying because of a fundamental perspective and you can't put stop losses because you're a long-term investor. But if the basic premise of the investment thesis itself undergoes a little bit of a change, then you need to relook at it and not be stubborn about just that long-term orientation that you have. Now, more realistically and in recent past, what we've seen is a large investment asset manager exited this particular counter after having put faith in for a long period of time, which tells us that this sector and this company could not be in the same growth trajectory that was anticipated while that 675 rupees investment was made. So there could be some time for him to kind of see that kind of an up move. But I think the negativity has already been priced in. So I don't expect it to further lose ground. If you ask me, it could probably see a very sharp bounce back, but it'll peter out again at that 425, 450 zone. You know, it's not something which will go all the way to 675 in a straight line sort of a thing. So yeah, then he has to take a call. Whether he could average at these levels, that I think technically somebody can help out in terms of, making sure that the levels are adequately, enabling for that.
Okay. Actually, we have a long list of questions, so let's take only one answer per question and go to Ashwini for the stock we discussed. Okay, actually, let me make this a blank question, a blank check. Is there any specific stock or stocks among the NBFCs that you will trade?
Basically, all those NBFCs were literally going out of business L&T Finance, Diwan Housing, maybe India Bulls Housing. All these guys came out off 50 to 70%, and the shorts which are standing at 11,000 are basically are in these stocks. So my sense is that even if they recover 50% from where they've fallen, it could still be a 30% rally on most of these stocks. Steel has come off very, very sharply, so their shorts are probably stuck. So just find out things which got hammered black and blue, and beyond 11,000, even weaker stocks will see sharp rallies. Things like infrastructure, Siemens, ABB, etc. Now, whether capex recovery happens or not, does not, it's a laggard sector, and you could see at least a 15-20% move here.
Oh, okay. Well, actually, I have a feeling you're going to say this also is in the same category that you discussed. DLF has done very well today. You think there's a trade here?
See, again, similar theory. All these guys have a lot of short positions, and they tend to get cleaned up when the market has this sort of momentum. But there are better real estate stocks like Godrej Property or Sobha, Kolte Patil. The non-NCR type stocks are probably a bit better.
Okay, non-NCR types better. DLF though has moved up from about 150 to 190 pretty quickly. We move on to the third story today. The rupee continued to strengthen for the third straight session. This after oil prices slumped sharply, and the Reserve Bank of India announced its open market operations, where it's going to buy a lot more bonds than it said it would earlier. IT stocks lost in trade yet again. Nifty IT index lost almost 1%, led by HCL Tech, TCS and Infosys. We've got a question on Infosys, Radha.
Yeah. Okay, well, I just wanted to clarify that the rupee has been strengthening because of crude. The bond yield itself is not going to affect. If anything, it would have been a negative impact with yields falling. But the fall in the currency, fall in the crude prices has been so strong that there is a huge rupee bullish impact over there. Okay, the question, the query is coming from S. Frangeline. He or she has shares of Infosys bought at 620 rupees. I think she wants to know if she should hold or sell. So that's 600 shares of Infosys purchased at 620 rupees, Prakash.
I don't know the time frame, but it doesn't seem to be, if it's not too long back that this acquisition was made, I would recommend a hold. For the simple reason that come 2019 and some of these larger players who have seen a little bit of a restructuring internally would be much better placed to go to the market and get some new order wins. Infosys has already done about 2 billion plus last quarter. And if come January things look up in terms of newer contracts on the digital side for them, which they have been building capabilities on, the stock definitely could very well get re-rated upwards. So a good level to book profits would be about 730, 750 according to me. So and that seems fairly attainable.
Okay. So stay put, Frangeline. That's the advice. All right. Okay, we'll take a break on that note. But as we do that, let's leave you with some market opinion we got from Saurabh Mukherjee of Marcellus Investment Managers. He's speaking about the macro situation.
My reckoning is the combination of a benign macro, which I think we certainly have going at the moment, and a capex recovery on the other side of the election, suggests to me that FY20, there's a decent chance FY20 brings an all-time high. I'm not so sure FY19 will bring the all-time high. And if crude stays where it is, I think the macro will become incrementally more positive as we approach the elections. My reckoning is between September through to Jan, the RBI will pump in around $25–30 billion. That's almost 1% of GDP into the market. But also, we can see alongside that the money market isn't getting any easier. The 10-year, the spread of the NBFC paper against the corresponding duration government bond paper stays very tight, right? So 10-year bond yield is coming up, but the spreads for the NBFCs are staying tight. I think banks are looking like a nice, smart place to be. Banks will not only benefit from the mark-to-market on their government bond portfolios, but there does look like an incipient capex recovery underway in our country. The first early signs that with the capacity utilization rate in our country hitting 75–80%, corporates are thinking about capex. It will probably pick up pace on the other side side of the elections. But I think banks are your best play at the moment on an incipient capex recovery.
Welcome back. You're still with us here on Markets Today Talk Back. We're wrapping up the day's events for you, and it's been another positive day for the bulls. Well, we got through 3 of the top stories of the day. Here's the 4th one. PSU Bank saw some big rally in trade on the back of liquidity boost by the Reserve Bank of India. cnbc TV 18 learned that the government may issue additional recapitalization bonds worth 40,000 crore rupees to public sector banks in the current financial year. Sapna Das broke that story, and she's now joining in with those details. Sapna, this is, has to be a clear positive for some of these PSU banks.
We are given to understand that the government in all probability is planning an additional recapitalization worth around 40,000 crores, that approximately in that range in terms of the public sector banks are concerned. And this money may come through the second supplementary, which is expected in the parliament this week. So either Thursday, either Friday, you may see that announcement coming through in terms of the allocation, the additional allocation of 40,000 odd crores for public sector banks in terms of capital infusion. This money obviously will be used for regulatory as well as growth capital in the financial year FY19 itself. Now, we are very much aware about the fact that there is already an existing amount of around 42,000 crores, which has yet to be disbursed or which has yet to be infused into the PSBs. Now, that exercise most likely is expected to be completed by the 2018 end or probably by 2019. And in the meanwhile, you'll also have the parliament nod for this 40,000 crores of additional recap fund coming in. So all in all, the government will be looking at a big envelope of around 1 lakh crore plus worth of recap bonds for FY19 as far as the fund infusion for public sector banks is concerned.
Okay, even without anyone prompting me, Sapna, I can tell you that Bank of India stands a very good chance because it has the least of the net NPAs. It's about 7% or so. And it's been consistently increasing its provision coverage ratio as well as the net NPA itself. So that's the question that's come from one Mr. Umesh. He has Bank of India shares, 10,000 Bank of India shares purchased at 91 rupees. And he wants to know if he should hold or sell. Prakash, have you lately tracked Bank of India?
Not really. Okay. I know I've always clubbed it with some of the other promising mid-sized banks, which could be looked at if you were to go beyond the SBIs and BOBs of the world. But specifically because he's got a huge quantity, a lot would depend in terms of why he got into it with such a significant position. Is it for a much longer, much meatier kind of a return? If that's the case, then you would have to wait. But otherwise, I think you would at least start nibbling into the profits that he's making. Because I'm not too positive on PSU banks going beyond this, start, stop kind of a move which it happens because of the news flow around the regulatory environment.
Okay, but what is his purchase price? His purchase
91.
price? 91. So he's actually sitting in the money.
Yeah.
Yes, Bank of India best placed, but maybe that it will come out of the recap is already in the price.
Yeah,
which is why it may have recovered a bit. But
it's safer to buy an SBI and hold on for a much more superior risk-reward equation. That's my
fair enough. Let me extend that question to Ashwini. I want to go beyond Bank of India actually. The Nifty bank, I never asked you, Ashwini, is that a good bet? Or is it better to trade individual financials outside the Nifty bank?
See, from what it looks like, rates and liquidity is getting better, so financials overall will do well. But the financials that will do better are the ones which have short positions because they have higher beta and they got smashed up much more. So housing finance and all kinds of NBFCs and PSU banks, etc., will do better. All of these other guys were doing well when the market wasn't doing well. So that's why I'm saying that you'll get a bit of consolidation in the large caps and the mid caps will possibly carry the show for a bit.
But which specific PSU bank will you trade?
There's no best or worst. Basically, the worse the stock, the more the number of shorts and the more speculation starts to rise. It's that kind of deal in all of these NBFCs and PSU banks because they're going through a pullback rally. So your Bajaj Finance will go up only 2%, but maybe a worse NBFC will go up 6-7% like Diwan Housing or Indiabulls Housing.
Right. Take your point, Ashwini. And with that, let's come to the last headline from Dalal Street today. Among stocks in news, Reliance Communication lost close to 10% in trade after the telecom department did not go ahead with the spectrum deal because of conditions put in by Reliance Jio, the buyer of that spectrum. Actually, let's get to Rima. She has all the details of that story.
Yes, a big setback coming in for Reliance Communication because the Department of Telecommunication has rejected the RCom Reliance Jio spectrum deal, which was worth 18,000 crore rupees, which would have helped Reliance Communication bring down its debt from the current 46,000 crore rupees. Now, in order for this deal to go through, RCom had actually submitted a corporate guarantee of 1,400 crore rupees, which was for its past license dues, spectrum dues, etc. to the government. But this was a corporate guarantee. And the Supreme Court had also approved the sale on the back of this corporate guarantee. But on Friday, Reliance Jio shot off a letter to the Department of Telecommunications saying that if RCom is unable to pay it, then this liability of RCom's past dues should not fall on Reliance Jio, and Reliance Jio will not be responsible for paying that. Now, as a result of that, the DoT has now rejected the sale of RCom spectrum to Reliance Jio. And this also puts in jeopardy RCom's plans to pay Ericsson, because it was hoping to get the money from the spectrum deal to pay Ericsson 550 crore in order to prevent Ericsson from dragging Reliance Communication to the insolvency court. So now that this spectrum deal, for now at least, has taken a big setback, we'll have to, try and find out if Ericsson plans to take RCom now back to the, to the IBC, because RCom has failed to meet that 15 December deadline to pay Ericsson that 550 crores. So big setback coming in for RCom as well as for the PSU lenders to RCom, particularly the likes of State Bank of India.
Another stock that lost in trade was ICICI Lombard. The stock lost close to 5% after we learned that the company is exploring various options for an acquisition. Remember, it was one of the companies in the race to buy Star Health Insurance. One of the companies in question could be Reliance General Insurance. Yash Jain. Okay, all right. So that's basically the story as far as ICICI Lombard. It sold off about almost 5% and came up a little bit towards.
I think actually we have run out of time, Prashant.
I think
so we are not
Yash
able
broke
to
that story. We could have.
Yeah, we thought we could get you more details, but we are unable to continue because we are out of time. Ashwini and Prakash, thank you very much for joining in and taking us through all the questions of our viewers. And thanks all of you for watching this edition of Markets Today Talk Back. Okay, but before we leave, we have the big man from the banking sector, Rajneesh Kumar, chairman of SBI. He spoke to me on a whole host of topics. So just listen in his views on the current NBFC liquidity problem. Is there a problem at all? NPA problem, the growth outlook, some snatches of that conversation.
The growth is coming more from the retail, which is steady for the last couple of years. And there is a demand, particularly from the government entities. Okay. We are seeing a huge demand from those entities. They are large ticket loans. And SBI,
so PSU entities,
all AAAs or highly rated PSUs. So it means that the government investment has picked up a lot as far as the infrastructure.
So CapEx has started.
CapEx driven by the government, and this is normally what happens. That first the CapEx cycle has to start with the government spending, and then later on the
is this
private
roads
sector
and infrastructure types, or
yes,
is it
yes. All
say oil,
everything.
ONGC?
Everything. Most of the loans NBFCs have been able to roll over. Even today there is a news item that now they have started again lending, getting back. So that way, like the situation which was prevailing about say 3 or 2 months back. So now the situation has improved considerably, and it all depends upon that any HFC or the NBFC, what is the quality of their portfolio with the builder.
Okay.
But we have to also keep in mind this fact that in the last 3 years, the offtake of the inventory as far as real estate is concerned was slow. So builders were holding on.
Yes. So now they may have to allow the prices to fall.
To some adjustment in the price and sell off quickly and then pay off their loans.
Okay. Do you think that the need for a special dispensation to NBFC is not there, considering the Reserve Bank has boosted OMOs considerably?
Right.
Now they're going to give like 2 lakh crore from December to March.
Right.
So you think
I think overall liquidity in the system will be all right. And then it is all about the credit quality of the NBFC themselves. Where the
it's
lenders
not a liquidity issue, it's a
credit issue in any case, like nobody can do anything about it.
No matter how much money you throw at it.
If it is a bad credit, it is a bad credit.